Hey guys, this is Alex Owari from ONG Tax and Accounting Services. So if you're watching this video, chances are that you own a Delaware C corporation and you've received a Delaware notice that says that your corporation owes thousands of dollars in franchise tax. In fact, you're very much confused, you're disturbed, and you don't know what to do. So my purpose here is to educate you a little bit, ease the pain, and it also gives you an alternative on what to do when you fall into those situations. Now, before we start off, let me throw a word of caution out there that this video is for educational purposes only, and it's not meant to be a legal or tax advice to anyone. So at any point in time you need a legal or tax advice, you should always consult a tax attorney or a CPA or an enrolled agent who's going to review your situation and give you a proper advice. So with the disclaimer out of the way, let's talk about what really can happen when you receive these notices, how you can actually recalculate what Delaware is giving you and come up with a lower rate. So the issue is very straightforward and simple. In Delaware, if you have a corporation, Delaware uses two types of calculation in determining your franchise tax. One of the method they use is the authorized share method, as I have here. And then the second method they use is the assumed par value method. And I'm going to show you how those methods looks like and how they work together. I might not be able to go into details of how the calculations work, but I'll show you how it looks like. I'm also going to go ahead and show you an example of a company that has received these notices or that has this higher taxes showing on the Division of Corporation website and what that company can do to reduce the taxes. So we're going to go straight into it and then show you how this taxes works itself out. But when this happens, when Delaware sends you this notice showing that you owe higher taxes, you don't have to panic. All you need is to get a professional advice, hire a CPA or hire an attorney who is going to be able to help you out. So we're going to go straight into the Delaware Division of Corporation and see how high some of these taxes can be. So we are currently on the Delaware Division of Corporation's website, and as you can see, we have a company here that's showing that for 2021 alone, they owe about $148,000 in franchise tax. Now, that's a lot of money. And this is the reason why you have these clients coming to me to figure out how these things work. When you get into this kind of situation, as you can see from this screen, you could tell that this entity is inactive, and so the state is even saying that the payment of the tax itself will not restore the entity into good standing. So usually what one would have to do is to pay all these taxes, to recalculate the proper taxes, pay it, and then file the proper forms to revive the company. So the company can be inactive when it's forfeited or void. Those two situations can happen. So you always have to maybe call the Secretary of State, address first, the phone number, and then figure out why the entity is inactive. But in most cases, the entity becomes inactive because people fail to file these forms on time, and Delaware forms are due on March 1. So let's go into the 2020 return here and look at how high these taxes can be. So as you can see here, when Delaware does its own calculation, it says that the franchise tax itself is, $47,000. The penalty is $200. The interest that has accrued from March 1, 2021 to current date is $8,600. And then you have the annual filing fee. Now, the total amount due for this client is $56,000. This is happening because Delaware is using what we call the authorized share method. If you know how these taxes work, you can tell that the authorized share method generates much higher taxes than the assumed par value method. So we're going to use a quick example here. this is just an example, and at any point in time you want to file your own franchise tax. Filing this kind of taxes is a very serious business. So if you don't know what you're doing, do not attempt to do it. You need to hire an attorney or a CPA to help you out in reducing your taxes, because at the end of the day, we need to review all your financial statements and we need to come up with the proper numbers. Now, let's use this company as an example. And you have this company that has number of shares that is currently authorized by Delaware is 10 million. Let's just assume that the corporation issued all 10 million. We're just assuming. At any point in time, you want to know how much shares you've issued to your shareholders or issued to people, and you don't understand how this works. You need a tax attorney, or you need an attorney that understands how corporate taxes work to be able to let you know what your issued shares are. But in this specific example, we're going to deal with number of issued shares. So we have 10 million that's authorized by the state. Okay. And let's also say that we have 10 million that is the same amount of 10 million is issued. Okay. So I think this adds up to 10 million. So once you do the 10 million, you type it in here, and then you need to figure out what your asset is. Now, for this specific example, let's just use an arbitrary number or amount. Let's just say our gross assets is 50,000, and gross assets, you can find it in your balance sheet. Your balance sheet has to be your calendar year or your fiscal year, whatever method you used in filing your tax return. So for example, if you're filing a 2020 franchise tax, you should be using the 2020 1120 form that you completed. When you go to Schedule L, you're going to see your balance sheet, and it's going to give you your gross assets. Again, if you don't know what gross asset is, consult an attorney or a CPA to help you out, because this things here is not a joke. You always need someone's help if you don't know what you're doing. So in this case, we type in the gross assets. Let's just say that this company has assets of 100,000. Let's just say that when we look into the tax return they filed for 2020, we see that the gross asset is 100,000. So this is an arbitrary number. And then we're going to use the asset date. Okay, because this company files on the calendar year, we're going to use December 31st as the asset date. So we do this. Okay, so for this company, we want to try and see if we can reduce the taxes from what Delaware is calculating to what we think, the taxes should be. So once you've put in all these numbers, you go in here and you recalculate, and it takes a minute for the system to round itself up. But as you can see, when we did the recalculation, the taxes has been reduced from 56,000 to 758. Now, if this all looks good, then the next step for you is to actually go through all this process. Now, when you're filling these things out, it's a combination of legal and tax issue. So if you don't know how to fill the rest of these forms out, you always need to consult a tax attorney. I cannot stress on this or emphasize on this enough. Alright guys, so I hope this recalculation and redetermination video helps you out. And if at any point in time you get stuck in this kind of situation and you want to file your franchise tax correctly, you can always reach out to me and I'll be happy to help you out. The final word of caution out there is, when you're doing this, you always need to consult a tax attorney to be able to help you figure out if you're doing this correctly or calculating the right taxes, because messing this thing up can further complicate your issue. So I hope this video helps you out, and if it does, please click like, subscribe, and share. Talk to you soon.